So, big news this week.
Big news.
What happened this week?
The Fed's lowered the rate.
Lowered what rate?
Well, the interest rate.
What interest rate?
Not the mortgage interest rate. How's that? That's where he was going with that.
They lowered the Fed rate,
They lowered the Fed
also
rate.
known as the discount rate.
Right. So what does that mean for our people out there that are thinking about buying or been looking?
Well, it's a good sign
Why is it a good sign?
because interest rates are coming down. So there's no direct tie between the Fed rate and mortgage rates.
But a lot of our consumers think there are.
Yeah.
Okay.
However, typically when the Fed rate goes down, at some point mortgage rates will follow that trend.
Okay.
So they've been going up.
But they went down a few
They
weeks
went
ago.
down because they don't follow.
Well, and they knew that the Feds were going to lower the rate.
It's no different than the stock market.
Yeah.
The stock market is the people who run the stock market or invest in the stock market. They're about 6 months ahead of where we're at.
Yeah.
So they look at
Yeah.
what they think or they predict is going to happen. And when you get news like unemployment or inflation, if it's in the range that they thought, not much happens. If it's different, that's when you see the market change.
we'll go.
So the interest rates from the Fed change this week really haven't had much effect today on mortgage rates. They had already priced that in. It's already baked
Right.
in, as people like to say.
They were ahead of the game a
They
little
were
bit.
ahead of the game.
Yeah.
However, I think there's going to be some downward pressure on,
You think?
on mortgage rates. I do. I think there's more things happening in our economy than we understand today.
And may never really understand, right?
Unemployment's going to be the one that's might push that a little lower.
That's a biggie. That's a biggie.
But you ask about what does that mean for our clients, and I've been telling people I know you have too, for a year and a half, is quit trying to time the market, whether it's pricing, whether it's interest rates, whether it's inventory, because you won't, and you'll sit on the sidelines and not buy. Right?
Well, that's because a lot of people listen to people that are not in our
Correct.
industry, and they don't know what we know,
Correct.
right? So,
And I just had a situation with one of my clients, and we're in escrow, and she was looking in that 310 range because that's all she could afford.
That's a tough
Everyone's
range.
tied to their payment, right?
right.
And we found a house, we didn't get it, and through the course of looking at homes, communicating with her lender, she found out that the interest rates had dropped, and now she could afford in that 330 range,
Yeah.
and we actually are
So like 25,000 difference when it's dropped.
and
this
her,
little.
and her payment is less.
Yeah.
So when I say stay in the game, you can look at houses, you can slow or speed up however you think you need to. You can be a little more critical of what you look at or not.
Right.
And if you find one that you think you love, you can check. And if it doesn't make financial sense, you move on.
You move on. But you
But-
stay. You
but
stay looking.
because
yeah.
what it does is it gives you a lot of knowledge.
Yes.
So you'll be better prepared when that home does come on the market.
That's right.
You'll be better prepared knowing what you should buy, because that's usually, especially with first-time home buyers, second-time home buyers, they're not really sure what it is they can buy or want to buy. They have an idea, but until they get out and see.
Well, you've got to see what's out there. And then as you're out there looking, you're going to see, well, I like this, or maybe I want this instead, or maybe I want that instead.
Exactly.
So if you're out there and you're continually looking, right? And then you get lucky enough that the rates go down, or maybe you get a promotion on your job and you can afford a little more, right?
There's a program with a particular lender where you
Yep.
get down payment assistance, or you find the house where you can actually get seller credits to buy down the rate, or buy a house that is not the way you want it, but
Yeah.
it just doesn't need
Yeah.
any structural things, just needs a little elbow grease and a little money.
Yeah.
There's all those kind of things that you never think of up front
Yeah.
that I know goes through our heads all the time. You've got to get out and look and see and go, oh, this is possible. So you stay in the market.
Well, yeah, because if you don't, and so you're not looking, you're not in the market, you're not doing anything for 6, 9 months, 12 months, and then all of a sudden the rates take a drop and you're like, oh, now I want, you don't know what you want.
Well,
Literally, it's going to take you a little time.
And here's the other thing. And all the people who've been waiting,
Oh, they're all waiting. Yeah, they're all guys. They're all coming out.
they're jumping in the market.
So wait till you hear this, okay?
Go ahead.
No, I'll let you say it.
So just over the last week,
Uh-huh.
there's been a 14% increase in loan applications.
Yeah.
So what does that tell you? Those people have been sitting waiting. They heard the rates went down,
Mm-hmm.
although the mortgage rates really haven't. They've already been down there.
But still,
So they're now jumping in the game. And so if there's 14% increase, you got to imagine there's at least 10%, 12% that'll probably get approved. So now that's 10 to 12% more buyers competing for the same houses.
for the same houses with not much inventory.
Yeah.
So there you go. You have more competition now. And that's, if we continue down this road, which I spoke with a couple lenders and they do think that we'll drop some more. And obviously this is an election year, so we know things change with that. But that's going to push more buyers out into the market. And if we don't get more homes on the market, you're going to have high competition. And what happens when you don't have enough homes and you have a lot of buyers out there?
Prices go up.
Prices go up. So all you people that waited, I get it. We understand affordability. We understand making our payments and budgeting and all that. But if you've waited a year and a half, your prices have gone up on those houses. You might have been able to get that house 20 grand cheaper even the year before.
Even if interest rates came down a point, we did this on another video, at a $400,000 mortgage.
Mm-hmm.
If you waited a year, that house now in Fresno and Clovis, that house now is selling for $418,000.
Mm-hmm.
The change in 1% interest saves you about $4,000.
Yeah. So
So you've lost about 12 grand.
You've lost some money. I was reading an article to him on an economist, and I won't quote who she is or exactly what she said, but basically the same thing. If you have an interest rate, if you have a point drop of 1%, your home prices are going to go up anywhere from 5 to 10%. So my whole theory is, if you can afford to buy a home, buy a home. Because what did he put? Did I see on here, or was it on, it was Madera. The average rent in Madera, I didn't tell you that one. $2,700 a month, the average. And of course, we have some less, some more, right?
So you're talking
$2,700.
about, for an FHA, that's probably a $375,000 home.
And you could be owning it,
Yeah.
right? So,
Buy what you can buy,
yeah,
get in, water's fine,
yeah.
and quit trying to time the market.
Don't time the market. And we have a couple good lenders that we work with. So if you have any questions, any interests, we're always here to answer questions, okay?
Who you work with matters.
Who you work with absolutely matters.
A little selfless plug.
Oh, sorry. I couldn't help it.
As always, like, subscribe, and share to anyone you think might enjoy this content, and we'll talk to you next week.
Bye.